My friends. Well, all right. Good day in the markets today. A lot of things going on. Welcome back to the channel. Before we get rocking and rolling too far into it, let me start by saying you guys know the deal. I'm not a financial advisor. Everything I'm doing is for educational purposes only. At the end of the day, you always need to do what's best for you and your portfolio and for your family because that's what you're stuck with at the end of the day. So don't just listen to me. Don't just listen to Trey. Don't just listen to any big, YouTubers or anything like that out there. At the end of the day, do what's best for you. Make the best decision for you because that's going to be the decisions that you can sleep with at the end of the day. So I wanted to jump in here and make an update on AMC as far as what I was saying. If you haven't done so already, please follow me on Twitter, Colin_Gladman. I'm getting to the point, guys, where I've got people tweeting at me every single day that I've got imposter accounts and people asking them about crypto or anything along those lines. I will never DM you about crypto or anything like that. Everything that I do, Twitter is the only place that I am. So don't listen to anybody asking you to follow on different social medias or anything along those lines. So that's just you can find me on Twitter. You can talk to me on Twitter. Also, I am debating opening up my DMs and everything like that. I've never done that for the obvious reasons. I don't want to get bombarded with stuff 24/7, but I'm considering doing that, so we'll see how that goes. But like I said, it's also getting to the point where I always try to talk to everybody, but it's just I can't with how many followers I'm getting to. So sometimes you might have to ask questions, more than once. If you see a post of mine that's getting low interaction, sometimes that's the best one to go ask me a question, even if it's not related to the post of what I'm talking about. So let's jump into the charts. First things first, let's talk about options. Oh no, we can't talk about options because we don't do options in May. Except for, what the option chain shows. There's plenty of people still buying options. I kind of laid out my view on options in my weekly update video. If you're thinking that options are slowing down MOAS or squeeze or anything like that, you're being lied to. You need to think about who you're letting get into your brain. Make sure if they're showing screenshots of a source of a trust me bro, you need to take that information and you need to throw it out and put it in the garbage can where it belongs. Okay, do research for yourself. If you don't understand how options work, that's okay. All right, that's okay. I used to be that way too. So if you don't understand how the options are going to work and help gamma ramps and squeezes and everything like that, that's okay. Also too, if you understand options and you go, options are not my thing, buying and holding is my thing, I'm okay with that too. But just saying options are bad, you might as well go write King Griffin check yourself and everything like that, that's what you gotta get out of your head. There's lots of ways to skin a cat, so to speak. And so that's why I'm always preaching education and trading your plan. So let's look at the options. So as of today, AMC closed at 12.90 today. Obviously some more options came in the money today. When buying options, I do agree that there are good options to buy and there are bad options to buy. If you are even considering going way out of the money options, which for me, way out of the money options at this point is pretty much anything above like $15. Anything way out of the money options, you need to go months and months and months out. Theta is going to kick your butt, and you need to make sure Theta is on your side, not fighting against you. I've got some options that are already close to in the money, but they're not even until June expirations or anything like that. So there are unintelligent option buys. That's not what I'm saying. Just like there's unintelligent stock buys and there's unintelligent stock prices and things of that nature. There's always unintelligent aspects to every single trade. So that's why, sound like a broken record here, but I preach the education aspect of it. Become educated so you make the smart buys. Now, that doesn't mean every trade's still going to win, but you're going to have way more winners than losers. When you have way more winners than losers, and it's compounding interest, you, my friends, become a winner over the long haul, which is what you want. You want to become a winner over the long haul. Not every trade has to be perfect. You're going to lose some, and you got to just cut that thing and get out of there. So when looking at options, if you want to help when you're buying options, you need to buy in the money, at the money, or slightly out of the money. I personally, when I do options, I don't do weeklies, okay? And it's not a new market to me, but I paper traded them for a while. You guys that follow me for a while know that I do the wheel strategy all the time, selling cash covered puts, which turn into cash covered calls. And you do the wheel strategy to constantly make myself guaranteed games. But just buying, puts, or buying calls is something that actually putting my own money into is still something relatively new to me. But I've been studying and researching for at least a year now. Been paper trading for at least about 8-9 months now, and you can make some awesome gains in it. And so that's why they are valuable to me. But I also value my hard work and my money, and so I'm not going to put some money into anything that I don't understand. So the biggest strike price that we've got coming up is the $15 options. I think I saw that max pain was like right around 15 or 14.50. So it's no surprise, especially being an OPEX expiration, that there's going to be a lot of strikes at these big, obvious, round numbers. I bet if we go down here, yeah. So you got 20. There's 14,500 contracts. And then in like my weekly outlook video, dude, these are growing down here. Come on, guys. Again, I don't mind you buying these if you're purely just, lottery tickets. The people that buy these with the majority of their portfolio and then are like, no, option screwed me. That's what I got a problem with. So don't buy those. Okay. Not financial advice. Trade whatever you want. Buy whatever you want. I don't care. But if you want to make money, which I hope is your goal, it's definitely my goal for myself and my followers and my channel. Buying these, especially at this point in the week, I would be buying only kind of in the money or at the money. I'd actually be coming back here to maybe around like the $11 range, and I'll explain why in the video. So option chain is looking good. Let's go down here to some puts. So yeah, that would be nice to keep these 11.50 puts out of the money. We're going to be running into some of the walls up here if we get up here into like this 13 and even 14, all the way up to 15. There's some decent loaded puts, so there's going to have to be some working through that situation. But let's jump into the chart. So we've got some gaps, and thankfully none of the gaps would require us making a lower low. So we've got the gap that we made on Monday, right? Yep. Nope. No, Friday. Is that one the 13th? Yeah, it was Friday the 13th. Yeah, I don't need to check that. Yeah, so we have the gap that we made on Friday the 13th where we gapped up right here. And we haven't come back. I thought maybe right here we get a nice little wick down and cover that gap, but we haven't. So we definitely have a gap that we need to address that's right here. And then there's also a little one. It's hard to see it, but right here. Okay, so we've got two gaps. All right, we've got one that's right around that $11.83 from today. And then we've got the big one right here that is going to be from $11.20 all the way up to like $11.50, I think. Yeah, $11.50. So we do have two gaps. Now, here's what's not good about the price action. So the price action, we are getting a push up, especially today's price action. We're getting a push up, and this is on the 15-minute chart, guys. We're getting the push up, but as you can see, from here to here, price action is trending up. But from here to here, volume is trending down. That's not good, okay? I would have liked to have seen the overall volume coming in with that. But this is why I tweeted out there's lots of possibilities going on, because it is still playing out a very similar fractal of what we've done before, and I'll get into that towards the end of my video. So volume decreasing, price accelerating, or price going upwards is usually kind of a bearish divergence, okay? When you see the price going upwards, you want to see the volume continuing to come with it. So like I tweeted out the other day, sustained volume equals sustained moves. With this, it doesn't look good. Like if I was just looking at this, if you just showed me this chart, I'd be like, you've got two gaps, you've got the price going upwards, and you've got volume decreasing. I would not be overly bullish in this situation. Also, if I pull up some indicators here, let's look at the RSI. So once again, 15-minute chart, at the end of the day today, my friends, not only did we continued pushing up higher. So if I'm going to add on extended hours right here, you can see that this RSI is going to be super overheated. Okay, so I would imagine that we're going to see some type of pullback. My guess would, whether it's in pre-market tomorrow, or if like we get an opening morning flush and that allows the RSI to cool off. So the RSI is the relative strength index. When it starts getting above this range up here, above 70, it is way overheated. And if you just look, you come back here, every time we get overheated on the RSI, we are gonna have pullbacks. Okay, so that's where we are right now. It's reality. So I think short term I'm bearish, even though long term I'm bullish. If we jump in here now to the hourly candles, so once again, look, I mean, even on the hourly RSI is getting hot too. So I definitely anticipate some type of pullback tomorrow. Now, can it keep running hotter? Sure, it definitely can, but you're not gonna just have it, blow past through this. Let's go back here. Look, when we ran, when we had those runs up to 34, look what happened to the RSI. So both times that it got right around 86, then there were pullbacks at that point in time. So right here, it got to 86. What happened? Big pullback. Right here, 86. What happened? Big pullback. So there's going to be pullbacks when the RSI gets overheated, and the more macro you're looking, so as the daily or the 4-hour or the 1-hour RSI, as those get hotter and hotter and hotter, that's when you really can expect the pullbacks at that point in time. You can see intraday pullbacks on like the 5 and the 15 minute and still see an overall bullish move. Okay, so but this is definitely starting to get a little hot. Now, good news is though, is we've got a nice bullish ascending triangle that is trying to form here. Okay, so this is essentially when the price is making higher lows, but we definitely have resistance. Okay, so typically how these play out is they kind of bounce around, and then you have your breakout at that point in time. So what I would like to see for bullish continuation would be we get maybe some pre-market and an opening morning flush, come on back down here towards like the 1250 area, somewhere in that ballpark. And then towards middle of the day tomorrow or anything like that, then we start to continue to move up. That would be my most bullish case scenario, because we do, I believe, need the RSI to start cooling off a little bit for bigger moves. Once again, the cooler the RSI is, the bigger the move can be. And if we go out here, so I'll go out to the daily real quick. So the RSI still got plenty of room to run on the daily chart. Okay, so this, I'm not concerned about this. And actually, we want to see that RSI up above 50 to really be pushing, some of those bullish moves. So macro, when in doubt, zoom out. Macro, I'm still bullish overall. Micro, zoomed in, I would be bearish. And that's why it's important to overall follow your thesis of what do I think is most important on the macro scale. And the macro scale needs to line, if the micro scale doesn't match the macro scale, then overall I highly recommend you follow what the macro scale is saying more. Okay, so I think tomorrow morning, mid-afternoon, even tomorrow day, throughout the entire day could be a red day, but overall over the still next 2 to 4 weeks, I think I tweeted out the other day, I think the next 2 to 6 weeks for meme stocks and even potentially the market in general is looking good. That is still intact as of right now. We had a day where Powell came out and spoke and it didn't take the market. If anything, it actually rallied a little bit. So all good signs for the future. Now, last but not least, let's jump in here to the cycle chart. And like I said, you can see this even on the macro. So we had the one big day, of that $100 million volume, but then volume's been waning off ever since then. And like I said, price is still moving up. Now, when's another time that we saw that? Well, let's back up a little bit and find out. Oh, look, it's right here. So pre-June run, we had a big day of excuse me, yeah, right here. This is when we started gapping up. So we had a day, and then we had 2 more days, and the volume was still staying nice and low. Now, if we see a big move like this, if we see a 20% day or anything along those lines, we want to see massive volume coming with it. You guys, if you've followed me for any amount of time, you know I say volume is king. I would be way more bullish that these were some breakaway gaps if the volume was continuing to pick up, but it's just not as of right now. Now, if we go over here to my cycle chart, and once again, if you're new to my channel, I have been posting this chart since March the 26th of 22, I believe is the very first time that I posted it. Both of these charts are going to be done on the 30-minute candles. And the reason I do it on the 30-minute candles is I feel like that's what helps me match it up the best, but it is apples to apples. Now, what's taking way longer on this particular cycle is, the amount of time. So let's kind of look at something apples to apples here. So right here from the blue box on your far left, this entire cycle, the way I have it mapped out to kind of where I think we are right now was right around 32 days. Where we are right now, comparatively, is right around 119 days. So I feel like this cycle is kind of taking about 3 to 4 times as long to play out. What I'm confident in is the shapes playing out, the movements playing out. What I'm not confident in is the time that it takes, and that's why I'm always preaching not everything is going to be 1-for-1 or anything like that. So that's why I'm talking about the overall macro moves are going to be what's most important. But what I've been tracking really closely here recently is how did the EMAs, so the estimated moving averages, how were those interacting? So there's potential that we could come back here and, like I said, fill these gaps at like the $11.20. However, once our 20 crossed over the 50 and then pushed up towards the 100, we never came back down and filled gaps. Now, like I said, the price action is not necessarily going to be the exact same, but if you look at it, and the reason that I say that, my friends, is because I'm always talking about the overall market. Now, but what did we see today? We saw a decent looking overall market, which led to decent moves in our favorite meme stocks and everything like that. So I can't say it enough, man. The overall market is what matters. You want to see the cycle playing out. You need to be paying attention to spying the economy and the news that's coming out and everything like that. Because if the overall market is bullish, we're going to get our bullish moves, okay? So if you look here, once with the 20 crossed up into the 50. Now, here's what triggered some volume in my opinion, all right? Once this 20 crossed, and you can, I don't know how well you guys can see this, but literally once the 20 crossed over the 100, then we saw its biggest volume spike, all right? And then once we broke out of our resistance levels, then we saw the biggest volume starting to come in. So volume is going to be key to these moves. So as we move up and we hit some of these EMAs or anything along those lines, the volume is going to be very key to signaling that these moves are actually strong and powerful, and we don't have to worry about pullbacks or anything like that. So I would like the gaps, honestly, I would like the gaps to not be filled, okay? Because these gaps weren't filled back here. These candles, if you're like, I don't see the gaps, these are what are called Heikin-Ashi candles. They don't show gaps. If you go back, well, here, I'll just go back on to 15-minute chart. Let's go over here. Let me turn the extended hours off so we're on regular trading hours. All right, so these little gaps right here, you can see these little gaps, they didn't fill. We kind of had a series of gap ups right here, and then we were off to the races. So these two little gap ups, bing, bing, I would be okay with them not filling. All right, as long as we start seeing some sustained volume come in with it. So those are going to be the things that I look for. If we don't start seeing the volume coming in as we continue our upwards accumulation, then that's going to, and that will come from if the overall market is not doing well. So we want to see this continued movement. We want to see the EMAs keep crossing over the way that they are. So we've already got the 20 over the 50. Now I would love to see the 50 cross. And I mean, if let me really zoom in here. I don't know how well you guys can see this, so if I'm just wasting your time and my time, I apologize. But I mean, you can see when I preach, cycle theory so much. I mean, just look at the way the EMAs, they kind of made this little wedge right here. And then it crossed, made the little wedge. And like I said, this is additional time, that's coming in. So if we look at just, wedge, so we'll go bottom of wedge to right when it crossed, that was 3 days. If I go right here, bottom of the wedge, right when it crossed, that was 5 days. Okay, now I also believe they can slow and speed up the algorithm, so I'm watching more for the technicals than I am more than anything. So once again, micro, we might see, some pullbacks or anything like that. I'd want to stay, let's see here, I'd probably want to stay at least in that $12 range or higher to make me, feel good about the continued moves to the upside. But like I said, volume is going to be key. That's what I'm going to be watching. I'm going to go ahead and get out of here. I know this is a longer video. I try to keep my updates videos a little bit shorter, but this is why I said there's a lot going on the chart. We need to be ready for anything and everything. So that's what I'm looking for, my friends. I will see you next time. Have a good one.